This stock just crushed earnings. It's been on a massive run, and yet it's still not trading at some ridiculous, nosebleed valuation like so many others out there. That's rare in today's market, and it's exactly the type of opportunity long-term investors look for. Now, I keep buying this stock, but it comes with a warning. If you don't understand the strategy behind it, you could get burned. So today, I'll break down the 5 reasons I'm still buying, plus the key risk you absolutely need to watch for. Before we get into it, comment below with the stock you think has the best risk-to-reward ratio in today's market. Not just the best stock, the best balance of risk and reward. I read every comment, and I'd love to see what opportunities you guys are spotting out there. For me, that stock is SoFi, and here's why. Reason number 1. The management team. Let's start with the most controversial piece. The management. Anthony Noto, SoFi's CEO, gets roasted all the time online. People call him the worst CEO, criticize his decisions, and freak out on social media every time something doesn't go their way. But here's the reality. This is the same management team that turned SoFi from a niche student loan business into a diversified fintech platform with banking, lending, investing, and even crypto offerings. That's not easy. And they've done it while beating and raising guidance for more than 15 straight quarters. Think about that. Quarter after quarter, they underpromise, overdeliver, and execute. That's not luck, that's leadership. And here's the thing. The people bashing Noto often don't understand banking at a high level. They see a decision, don't like it, and jump to conclusions. But when you actually listen to the earnings calls, you realize these decisions are strategic. They're positioning SoFi for sustainable growth, not hype-driven growth. And as a shareholder, that's exactly what I want. Reason number 2. The 2026 to 2027 roadmap. This is what really separates SoFi from the hype stocks. Management has been very clear. 2026 and 2027 are the years they've been building toward. Right now, they're pouring the foundation, and every quarter, you can see that foundation growing. New partnerships, new product offerings, stronger tech infrastructure. They're not chasing a quick pump in stock price. They're building a financial powerhouse. Compare that to some of the moon stocks out there that trade purely on hype. Those companies don't have a roadmap. SoFi does, and they're executing on it step by step. If you want to build long-term wealth, you don't want a company that spikes and crashes on social media rumors. You want one that's laying the groundwork for exponential growth in a few years. That's why I'm excited now, because we're still early in the story. Reason number 3. Earnings performance. Now let's talk numbers. The most recent quarter was phenomenal. Growth rates blew past guidance, margins are improving, and profitability is scaling faster than expected. In fact, guidance almost doesn't make sense anymore because SoFi keeps outperforming it. And here's the best part. It's not just projected future growth. We're already seeing high-margin businesses contributing to the bottom line. This isn't speculation, these are tangible results. And when you invest in a company that consistently beats expectations, the stock price eventually catches up. It's just a matter of time. Reason number 4. The lending platform. Now, here's where it gets really interesting. Most people look at SoFi and think about student loans, personal loans, or maybe their app. But the real game changer is the lending platform. Right now, it's focused mostly on personal loans, but over time, they're going to expand into mortgages and other categories. And here's the key. They don't hold the loans. They just facilitate them, take a fee, and move on. That means it's scalable, it's capital light, and it's high margin. Imagine a financial ecosystem where SoFi becomes the middleman for millions of loans. Customers win because it's easier and cheaper. SoFi wins because they get consistent high margin revenue. And in my opinion, this will become one of SoFi's biggest profit drivers in the next few years, bigger than most people realize. Reason number 5. Valuation is still reasonable. Now, let's address the elephant in the room. Valuation. No, SoFi isn't cheap anymore like it was under $10. That was the golden buying zone. But compared to many other high-growth stocks, SoFi is still trading at a reasonable multiple. This isn't Tesla or Palantir where the valuation makes it tough to justify adding. SoFi's fundamentals are improving faster than the stock price. That's exactly where I want to be. Could the stock dip? Of course. Wall Street is irrational all the time. We saw Meta drop to the $80, which made no sense. Same with Amazon. Same with Google. Same with Palantir at $6. So if SoFi drops again, I'll happily buy more. Because my conviction is based on fundamentals, not hype. The warning/risk factor. But here's the catch. You can't just blindly buy and hold without a strategy. SoFi is a long-term play. If you're looking for quick gains, you're probably going to be disappointed. The risk here is patience. 2026 and 2027 are the breakout years, not 2024. So if you don't have the discipline to hold through volatility, this stock could frustrate you. But if you're investing for the long term, this is the kind of setup that can pay off massively. So those are the 5 reasons I keep buying SoFi: a proven management team, a clear roadmap into 2026 to 2027, consistently strong earnings, a lending platform with massive upside, a valuation that's still reasonable. Thanks for watching, and I'll see you in the next video.